Probably the most important moment for any trader or investor is the moment when we make our decisions. When we make our decision to buy or to sell or to wait. And the most amount of energy is spent during that time. And it's quite difficult sometimes to make this decision. Imagine the situation that you chose the company and you like this company. And you're trying to identify the best moment when you want to enter that position and buy this particular security. And you understand the theory, you understand the technical analysis, and you see that the company at support level and it bounced back up and start going up. But you think, wait a second, maybe it continue to go down and reverse it again. But then it's growing more and more and more, and you understand that you missed the opportunity. In some cases, some people cannot handle that and they start buying at the higher prices, and sure enough the share price start to go down again, and they're frustrated because they have capital loss now, even though the share price might recover after that, but still it's not a pleasant situation to be in. Hi guys, my name is Igor Vasiliev, and during this video we're going to discuss this particular situation on a real example with a real company which trades at real time, and I'm going to show you how I'm going to deal with a situation like that. So if you would like to know how to deal with this situation and what kind of strategy you can use in this particular case instead of buying just shares, stay with us, and at meantime you can subscribe to our channel and share this video with somebody who might be benefit out of it. So guys, we're going to look at real company which called Tencent. This is a Chinese company. It used to trade in American market, and then it was delisted, and now it trades only in Hong Kong. You can trade this company using interactive broker if you have the account with them. If you don't have, you probably can find another broker to trade. But if you can trade Hong Kong, it doesn't really matter because you can use this strategy in United States market too, or Australian market. Very important thing, before you trade any security, I recommend you to research it in details using fundamental analysis. If you don't know where to get this information, the best way is to go to their website. And as you can see here, if you go to tencent.com, you can go to investor section, and you can see quarterly results, announcement of financial reports, conference call, investor calendar, etc. So you can go and listen their webcast where their directors tell you not only about their past performance but also about future plan, which is very convenient way to learn about the company's activity. Let's assume that you found a company and you like this particular company fundamentally. You see that revenue grows year after year, the profitability grows after year, and the company is taking a very active part in development, new games, new market, etc. So you like company fundamentally, you like it as a business, and you see the potential in that particular business. The next question, at what price to buy their shares? A lot of traders, they use technical analysis in order to identify the prices. So let's have a look at the chart. I'm using TradingView for that purpose. So let's have a look. In 2017, we can see the lowest price was around $180. After that, it went all the way to $470, nearly 2.5 times during 1 year. Okay, fantastic growth. Then the share price collapsed to $250, and we can see the highest price was in 2021 in February, close to $780. And after that, we can see the sharp decline, and the lowest price was probably $994. Now, of course, some of technical analysts, what they are saying that we have already once bounced from this level to 198 somewhere close, and then we tested this level once again, and we bounced up again. So, and what they're saying right now that this company, it seems like found its bottom, and now we can have the reverse pattern, so we can see the growth. Now, of course, like the share market is like that. Yeah, it can break through this level and go all the way down to $250 or even lower. Now the question is, what's the reason? And if you go and look at financial reports of this particular company, you will see that the current profit of this company is much higher than in 2019 or in 2018. So the current share price is lower than or at the level of those years, but the profitability of this particular business is higher. There are some challenges right now. We're not going to discuss that. But again, before you make any decisions, you have to, right? You have to, guys, analyze it financially. So let's assume that you found this company, you like this company, you want to have it in your portfolio, but you face this particular situation. You can see very quick, only one day it touched $295 and bounced back, right? So then it didn't reach this time. So can you imagine if somebody at that particular moment was waiting and set an order here to buy, and it's never happened? It bounced all the way up, right? And the person missed the opportunity. The second time, again missed the opportunity because it bounced back up. The third time, again missed the opportunity, right? And the fourth time, when the person already said, okay, I have to buy it, and bought the shares at this particular price, the share price collapsed. And of course, it's really frustrates a lot of investors and traders. What to do, how to behave, so what kind of trading strategies we can use in this particular moment. So, and I'm going to show you in this particular case, in real example, real time, what we can do in this situation. So imagine that we bounce back. So again, there are two voices in our head. One voice is telling you, okay, it's going to break through and it's going to go all the way to $400. Another voice in our head is telling us, no, it's going to bounce back at least to $310 or maybe even lower to around $295. So what should we do? Should we wait, okay, and until it goes down, or should we buy and kind of get a profit? That's where two voices. So if we buy it at this particular case and it drops down, it's really frustrating, right? Because we're sitting in capital loss. Even if it recovers after that, it's still not a nice situation to be in, right? So if we don't buy and then the share price goes all the way up, so we're not making any money and our cash is sitting in our, trading account, and inflation is eating out it. Now, what can we do instead of that? So there is a trading strategy which called selling naked puts. Now, guys, a lot of people believe that selling puts is very dangerous strategy, and it is dangerous strategy if you don't know how to use it and if you use it in the wrong way. Now, first of all, before you use this strategy, you have to like the company. You have to believe that you have to want to own this particular company. So if I don't want that company, for example, if I don't want to have it in my portfolio, I will never ever to use this strategy. Remember again, so I use the strategy only when I'm happy to own this particular company. So guys, imagine that this is the share price, and I think, I prefer to buy it around $310 or maybe $300, but it might never go there. So in this particular case, I'm using the strategy. Let me explain you how the strategy works. So there are some people on the market who bought the shares here, and the share price goes up now, and they're afraid that it might go down. So they want to secure their profit. And what they do, instead of putting a stop loss, what they do, they buy an insurance. So what do? I come to the people like that and I tell them, look, I can promise you that if the share price goes down, I'm going to buy it at $310, even if it falls lower. And this person said, okay, fine, let's have this agreement. I said, how much you're going to pay me for this? And they tell me, I'm going to pay you, for example, $10. It might be less, it might be more, it depends on the situation, but just for calculation, in order to do it easily, we can do $310 and $10 they are paying me. So what it means, if the share price keeps going up, they are making all this profit, right? It's like you bought a car and you're driving this car and you're afraid that you can crash it. So you pay, let's say, $1,000 to insurance company. So, and then 1 year passes, so you never crashed your car, so but you lost your $1,000. So in this particular case, the similar situation happens to that person. So what they did, they secured the sell price, so $310. So if the company collapsed in price, So they always can sell it at $310. But because the share price went all the way to $400, they made a lot of money and lost just this $10 because they bought this insurance. Now, it's good for them. Now, for me, why is it good? Because I got $10 and I kept $10 and I didn't have to buy anything. I just promised them to buy $310. So I have to have a cash and have to have an ability to buy this shares at $310, but I didn't buy anything. So if we assume that I have $310 in my account and I got $10 for 1 month of promise, so it's roughly 3%. So can you imagine if you do it month after month after month, how much you're going to make? So 3% multiplied by 12, it's roughly 36% if you do it on a monthly basis. Can you get more? You can. Can you get less? Of course you can get less. What the second outcome of this trading strategy can be? Imagine that the share price started to slide down, so it's dropped down, and we can see that support level around $300. So, and imagine the share price dropped to $300. So I have to buy those shares. So that person is going to sell me them at $310. So, but what would be my break even? Because I bought the shares, I have to buy shares at $310, but that person already paid me $10. So I paid $310, but I received $10. So it means that my real purchase price is $300. So that's exactly this level. So I purchased it at the level which probably was ideal for me. So, and I have shares now, and then when the share recovers up, I sell them and I make my profit. Some of you might say, oh, it's impossible. Who is going to do that? So let's have a look at real account, at real platform, how much money you can make today. In order to show it to you, I'm using Interactive Brokers platform. As you can see, this is option chain window. And on the right hand side is an option chain for puts. This price is already delayed because the market in Hong Kong is already closed. Actually, you can trade this in Hong Kong only, this share. But the same strategy is applicable to United States market, Australian market, European markets. Slightly different, but still can be used there. So these are prices which I can agree on buying those shares. So I can tell I'm happy to buy shares at $300. Even the share price is now $324. So if it falls below that, so only at that particular moment, I am obliged to buy it. Or I can go for $310. Or I can go to $320, or I can go to $350. So if I definitely want to buy these particular shares, I can tell I'm happy to buy at $350. So, and that person is going to pay me money for that. Okay, so and then within next 1 month, because it's 30 days, you can see it here. So if within 30 days the share price stays below $350, that person is going to sell shares to me at $350. Now we're not going to go in details why would I go for that particular price, but it can be done. So let's look at this particular price, $310, and we're going to look at the last prices which were traded today. So we can see that the last price was $7.50. So it was just few dollars off that particular price which I was telling you cost, right? $10. But in reality, look at this chart. This chart is for that particular put option. So if you look at here, so it's September 29th, okay, and $310 put. So it means that's the promise. That's the chart. You can create a chart for options as well. So, and you can see during the day the share price, not the share price, the option price was moving up and down, because the share price, you can see it here, right? During the day it went down to $314. And when the share price goes down, the price for put option goes up because more people are afraid that it's going to continue down. Okay, so they're happy to pay more for it. And look at this. During the today, the option price was $10.90. So 10 cents more, and we can see I had an order to sell it at $11. I would probably sell it. And because the share price went up, the premium for option went down. So I could probably buy it back for $7.50 and have a profit of $2.50 on that particular trade if I wanted. So guys, as you can see, you can choose the strike price you like. It can be $320 and you can receive, like last trade was $11.75. So if you sell at that particular like sell put option, right, or kind of give an insurance to somebody at that particular level, so your break-even price would be $320 minus $11.75 because you receive this money, so it's going to be $308.25. Is it good or good, right? So it means that you're buying somewhere close to these levels. As you can see, this strategy is quite unique and you can use it at the moment when you cannot make a decision to buy or to wait. In this particular case, you can lower the strike price as low as you want and you receive some premium. Even you can go to $300 in this particular case and receive $4.6. That was the last price. Okay, $4.6, it means 1.5%, right, on that amount. If you keep $300 and you received $4.6, it means you made within that month, even if you wait until the end and the share price didn't go that low, you made 1.5%, which is annually brings you to about 18% profitability, which is pretty impressive result. Dear ladies and gentlemen, if you like the idea of using this particular strategy and you want to learn more about this, so just look at the description below this video. There is a link and you can go to our website and register and receive a recording of the seminar where I explained in details, and it's free seminar, in details how to use this particular strategy and also 2 other option strategies. You can learn more about this. And of course, if you like this video, press the like button. Subscribe to our channel in order not to miss videos like that in the future, and share this video with somebody who you think might be interested in learning the strategies. All the best and good luck on the stock market. Bye.